Good morning and welcome to our panel on alternative data. I'm Karen King, Head of APAC Business Development for our equity business, and I'm excited to be joined by my colleagues from the Market Intelligence Division of S&P to discuss some of the key challenges, solutions, benefits of alternative data. We're also going to touch upon a case study and run through some of the new and interesting data sets in China. According to a study carried out by Lowenstein Sander in December 2021, 2/3 of hedge funds, nearly half of private equity firms, and 2/5 of venture capital firms presently use alternative data, and there continues to be a steady, maturing, and sophisticated landscape for it. However, it comes with its challenges. Data sets may be less raw, but you need to have capable data scientists to test them, or do you? On that note, let's meet our panel and delve further into these themes. Gentlemen, would you like to introduce yourselves, starting with Melvin?
Hi, everyone. Thank you for that, Karen. I'm Melvin Tran. I'm the Enterprise Product Lead for S&P Global Market Intelligence.
Thank you, Melvin. Andreas?
Hi, thanks for that, Karen. Hi, my name is Andreas. I'm a Capital Markets Product Specialist responsible for pre-sales deals. Thank you.
Thanks, Andreas. Doan?
Thank you, Karen. I'm heading the APAC Custom Solutions team.
Thank you, Doan. And then finally, Kevin.
Yeah, thanks, Karen. So I look after the Hong Kong equity sales team here at S&P.
Fabulous. So Kevin and Melvin, maybe you could kick off the session with giving us a bit more insight into why we're seeing so many clients look at alternative data.
Yeah, thanks, Kaki. I'll jump in there to start. So there's a number of factors involved in working with alternative data, but the ultimate goal is really to try and gain an information advantage that can improve performance and help investors in trying to stay, one step ahead of their competitors. Now that might come in the form of pure alpha generation for the quant funds, but it may also mean just an accelerated time to or more accurate decision making, for some of the fundamental guys, or as we're increasingly seeing, just a focus on risk management as well. Now, over time, you're always going to see, alpha erosion with established data sets as the adoption increases. So that drives investors to continually look for new and unique sources of alpha. So that's always, the process is always ongoing. With the majority of the new data that we're seeing being unstructured, improvements in AI, machine learning, and from there, natural language processing or NLP, are allowing firms to take greater advantage of this as these techniques sort of widen the sources of data that can be analysed. But you're also seeing more workflow tools becoming available as well for those that don't necessarily have the resources, or the sophistication, if you like, to take in unstructured data in its raw form. Now, a good example of this would be our Clarify solution. So that allows customers to build factors and models using sort of our numerous data sets or uploading external data sets, creating factors and models and then turning them into a strategy to help them manage their portfolios. I guess, more topically, another factor that we've seen recently, obviously around COVID, has led to the rise of the retail trader, particularly in the US, where their share of market volumes increased quite significantly. And we obviously saw the impact that their trading had on some of the meme stocks in particular, the likes of GameStop and AMC. And I think what that really did, and we saw it here in Asia as well, was that it opened up many people's eyes to the need to have a more data-driven approach, in this instance to the short side of the market, where having accurate and timely data, really sort of proved its value. It's all of these factors, sort of seeing the continued proliferation of alternative data as we've been seeing for some time, away from just the early adopters, those pure quant funds, and increasingly to the traditional sort of asset managers that they look to augment their investment processes.
That's great. Thanks, Kevin. Melvin?
Yeah, for me, Karen, I see it from the point of view of availability and accessibility, both of which has a cost component to it. So as an example, there's statistics that's proven and said to be done. 90% of the world's data was actually just created in the last couple of years. And upwards of that 80% of that data is actually unstructured data, predominantly text. So just to put that into context, I guess, that is about 175 zettabytes of data. What does that mean? For those that can remember, that's about, DVDs, right? So if you have a stack of DVDs, that's going around the world 220 times. that's the amount of data that's been collected over the last couple of years. So that's the part from a availability perspective. The amount of data out there is just tremendous, and the value that can be extracted from it, from those tools that Kevin has mentioned, is endless.
That's great. Thank you, Melvin. I mean, this really ties in with many of the discussions we see across the street, with an increasing number of non-quant funds, looking to implement alternative data into their investment process. But it's not always as easy as teams would like it to be. Andreas, we're forever hearing about the challenges firms face when looking at alternative data, especially with the ever-growing amounts of data available. Maybe could you please provide us with some insight into the common challenges that people face and the complexities around those?
Right, I can start with that. Maybe you can pick up as well at a later part. So in my pre-sales role, like the most challenge that I usually found from data, from our clients trying to process this alternative data is, I think, looking what kind of data they are going to put and what kind of data and where to plug in that data into their workflow. Because usually not all kinds of alternative data can actually be used for example, like investment purpose or like a company intelligence. For example, we call alternative data alternative because like we are not familiar with it, but like we know that let's see, the moon phases data, daily moon phase data is not an alternative data because we cannot use it in any of the investment process anyways. So the first challenge is to figure out what data, and then the next part is to figure out like it's time to intelligence as well. Because like a lot of these alternative data are really, really sector specific or very, very niche data that requires specific domain knowledge in order for one to process it. For example, like natural language processing, it's like the most commonly available alternative data, especially because text data are abundant. But the technology of NLP itself, real advanced technology of NLP, for example, like Google BERT came into fruition in 2017 or something. So potentially anybody who graduated college before 2017 probably has never taken any of NLP courses. So like a lot of learning needs to be done from within the firm as well, which means that looking for talents is also like one of the big challenges. And for example, like for investment, like asset managers, they're now competing for talents, not just within asset managers themselves, but they are competing for talents with Google, with who else is there? Like a lot of this like e-commerce platforms, this Bitcoin platforms, Bitcoin exchanges. Like everybody is looking for data scientists. Everyone is looking for people with the capability of doing machine learning or able to actually do self-learning in order to catch up with a lot of this requirements. So I guess like maybe you can also speak from like the platform and data warehousing capability, maybe the challenges.
Thank you, Andreas. So as you all know, we embarked on our data lake journey and launched it 2+ years ago. And at that time, we have onboarded slightly more than 20 petabytes worth of data across more than 1,500 data sets. Today, and I checked it last night, we are about 50 petabytes worth of data or so. And the number of data sets have grown tremendously, almost doubled to 2,700. The data lake is an excellent repository of data for research, but unfortunately, not everything is on the data lake. We have a plethora of delivery platforms. And just to mention a few, N6, web portals, CapIQ API, Express API, Express Feed, Snowflake, and etc. Based on the growth in the amount of data we've seen in the past 2 years, most of what Dr. Darmawan just mentioned previously has grown exponentially. This is both, from the perspective of volume and veracity of data. This obviously presents tremendous challenges and at the same time, great opportunity for us and our clients to unlock additional value. So just to highlight a few specific challenges to unlock value. The large volume and the number of data sets with terabytes in size is obviously one. require a data engineer with specialized skill sets and process to process big data sets and extract relevant time series for an entity, region, or a theme. So name just a few example skill sets, including Dask, Spark, Vex, Snowflake, Python, Pocket, HDFS, S3, ECS, EC2. It's endless. This obviously greatly narrow the user group. Next hurdle is obviously domain expertise. Given the number of verticals from M&T, automotive, and commodity, it's quite difficult to provide holistic view. Can we help our customers to find a specific time series for the company and the region that they're looking for in hours or day? Once we have overcome these hurdles, we want to find a relationship between time series using either AI model, machine learning, or Monte Carlo, as Dr. Darmawan just mentioned. This is where the data scientist comes in. And for every 100 ideas that we have, just a handful may prove to add value. How do we efficiently reiterate through the above steps hundreds or thousands of times? Where is the bottleneck, and which steps do we want to focus on? The kind of platform that we use determine whether we need to put a lot of work in all the above steps or much less to achieve a favorable outcome. Thank you. Back to you, Karen.
Yeah, and I think, one of the key things we always hear about is, it's mapping and linkage. It's tends to be, a real challenge, I think, for clients. I can see Melvin obviously nodding his head. Melvin, maybe we can talk a little bit about, the challenges around that.
And then you can potentially wrap that around, some of these digital transformation journey that clients are embarking on, right? As yourself and Kevin sort of touched on earlier, one thing's for sure, events of the past few years in COVID have expedited, clients' digital transformation journey. And, with that, digital transformation means various things to different companies. It can be hard to pinpoint. However, in general, people are looking at integrating technology, integrating data, breaking down data silos, as well as doing mapping, right, of entities. So they can have a 360 view of a particular company and make informed decisions as such. And like what Kevin mentioned, is to be a little bit more data-driven, to remain competitive, or even to survive. There was actually a recent research done by a 451 research team called The Voice of Enterprise. That survey, 55% of respondents expected to be data-driven, to be driving a lot more sales increases. 52% are hoping that will enhance their customer service as well as engagement levels. And 50% are hoping to improve business agility by being a little bit more data-driven. But at the core of it is the ability to be able to map entities and link entities to the subsidiaries, to the relationships, both upstream and downstream. Back to you, Karen.
Yeah, and I assume, once you've managed to map all that data, it's also, it's the data itself. It's, structured data versus unstructured data. And, some people love raw data, and the rawer the better, whereas others just don't have the actual, the ability to even handle raw data or understand. Again, it's that linking and that mapping, because it may not be mappable into a typical universe that people would naturally trade. I think one of the great summaries that one of our colleagues often uses is for the challenges is the V6: volume, variety, velocity, value, veracity, and variability. It really does. It speaks to what our clients essentially are dealing with when they want to look at all of these data sets. And as the space really continues to grow, so does the number of providers, solutions, the technology. But not all of the users have the appropriate teams with skills to navigate that data efficiently, as it often requires, as we've just discussed, complex coding capabilities. And I certainly graduated before 2017, so it's definitely not in my nature. But that complex capability of as we said, the coding, the data science, the warehousing, and then it adds in time. And this is the problem. There are so many data sets these days. It's weeding out, which ones are the ones that are actually going to add value and that you can actually make money on, quickly. So what are some of the solutions available to assist with the large, complex, say, quant teams, and also smaller firms with a team of quants who've, vested interest in using alternative data, but not maybe necessarily, as sophisticated? Ju, you mentioned, such names as warehouses, data lake, Snowflake, but could we go into a bit more detail about how us, S&P Global, but also, the likes of Snowflake are helping with that journey, and what should people be thinking about as they're going into that, that data world to actually help them with these, issues of storage, mapping, pulling through all these different types of data sets? What can clients be doing to actually improve that journey, and help navigate the world of alternative data?
Thank you, Karen. So it's, in this case, it's very important to think about the end state. What are the type of user that a firm targets before they embark on their data lake journey? You mentioned Snowflake. Snowflake obviously provide a very performant warehouse. It obviously costs. Warehouses are there to provide capture of transactional data. On the other hand, we have a data lake where we can put objects into it, very performant, unstructured data in many different file formats, ranging from Pocket, Arrow, HDFS. So when it comes to the final use case where we want to extract time series quickly for a company, regional firm, and use it in machine learning model, AI model, we obviously want the data as quick as possible, in seconds, if that's doable. What we've seen a lot of implementation is that it takes days or hours for a data engineer to go through the data sets, extract the relevant data, and then provide that to the data scientist. So data lake and data warehousing so great, but it's also important to think about the end users, how we can make the process as seamless as possible for anyone to access to any of the time series that we have in our data lake or warehouses.
And how would you do that? How would you, improve that process of, as we say, we've got a data lake, you've got a data warehouse. We now hear about lake houses, the combining of the two. I believe Golden Source are working on something that puts those two together. But what tools are we talking about? Are we just, as we said, not everybody has these, the ability to code, and therefore that strips out the ability for a lot of teams that don't have quants, but actually are interested in data. What are some of the solutions that you can be using to actually extract the data and test the data?
Thank you. So the large amount of data sets and the volume of it requires a number of skill sets, which I've highlighted earlier. The first skill set is obviously the knowledge to use all the data science software and compute resources. The second hurdle, which is also not insignificant, is the domain expertise, right? So we are working on a project internally where we ask the question, as we have thousands of product specialists across the firm, how do we programmatically provide a portion of this domain expertise that we possess to the end user, right? And Melvin mentioned some of it earlier, whether it's mapping or linking between data sets for a firm where the end user can specify, okay, I want to have information on firm ABC. What does S&P have for this firm? What does third-party providers have for this firm? How do I extract all the relevant data for this specific firm in seconds rather than hours or day? And there's a couple of things that we can do. Linking is one, and then the other portion that we can help the end users to connect. Anyone who's looking for this data and have found it, and connect the user to the relevant product specialist as well. So that's also an important consideration when designing a performance platform.
Yeah. And maybe Melvin, you just want to touch a little bit on the solutions around the linking and the mapping. These days, clients generally aren't left to their own devices when it comes to that. There's lots of different solutions with regards to improving that, whether it's at a simple level or a complex level.
No, exactly. And just coming back to my initial point around accessibility and lowering that cost. So clients are looking at either partnering or leveraging data partners such as ourselves to obviously enhance their operability, whether that's in terms of linking, as well as providing access, I guess flexible open delivery, right? There are various use cases that Kevin has mentioned before that requires either bulk data delivery or one via the cloud or a hybrid type approach, as an example. We also need to be concerned about potential jurisdictions where there are, data sovereignty regulations with regards to how we deliver our data to our clients. At the end of the day, it's actually lowering the data friction for our clients to be able to access the data from our environment into their environment and conduct the necessary analysis. And at the same time, that's obviously time to market, as is what Kevin touched on, allows them to get to time to market a lot quicker with their products and services. So as a data vendor or as a data partner, that's what we try to do from our side.
Thanks, Melvin.
Karen, can I add to what Doan and Melvin already mentioned about this?
Yeah, sure. Feel free.
Yeah, a very important point, from the practitioner's perspective, right, before we embark into using all this magic algorithm and stuff in Python, there are actually things that I usually suggest our clients to embark first, like try to get to know the data. Once the linking and the hardware and all the storages has been settled on, the next thing is try to learn the characteristics of our data. For example, if it's a shipping data, if it's ownership data, if it's a relationship data, we have to be able to pinpoint the tools that we are trying to use and to process this data. There is no magic bullet for all kinds of data. For example, if you want to establish, for example, a relationship data between a point A and point B, yes, we can do it with Python, but it will be very painful, and only a handful of people will be able to do it. But you know what? Microsoft Power BI, which is usually a free software, and it's installed in most of client's PC. If you already have Microsoft Office, has a template called force directed graph that can establish all this linking, these relationships between entities really easily, and it's much more colorful part. Another tool that we can use is maybe Alteryx or Tableau. These are all tools that are created for people who wants to embark into a data science journey, but they do not have the sophistication level to actually go hardcore into Python or MATLAB or any other programming language. Thank you.
That's really helpful, Andreas. And actually, Andreas, on that note, you've been.
We've lost your audio there, Kaka.
All the data in a data lake. Data lakes tend to be, sort of raw data as opposed to the warehouse that tends to be, sort of less raw data. But then it's that whole model of what do you then do with it? What connects? What works together? It can be almost like trying to find a needle in a haystack. So I know that you have, as I mentioned, been working with asset managers in Japan to use data lake to solve for some specific use cases. And I think, it'd be really great if we could talk about an actual use case, a practical application, of what's worked with these teams to circumvent, sort of some of the challenges we've spoken about today, and how, people can methodically approach a specific use case they may have, with a whole load of data, which they're not really sure which is the best parts to use.
Yeah, certainly, Kiki. So can we bring up the slide, please? Producer, can we have the slide up?
Yeah, it's up.
All right. So basically, I think that the first point that we are going to, and that I see a lot, like especially with the asset managers, not just in Japan, but across Asia Pacific, is like the transformation of relying on only one or two vendors for their data journey. Like this specific client that we're talking about in Japan is also a very good example with that. So they started with two large vendors as their main data providers. But then they realized that soon, because like I think Kevin already mentioned in the beginning, once traditional data, I think traditional data is like much already explored, and such that like the additional alpha value is very small or minuscule to that. So this is brings out the need that people have to go to alternative data solutions. And unfortunately, as we are one of the vendor, we also know that alternative data are so niche that not one provider can actually provide everything. So I guess like a lot of what the client's transformation needs, we see a lot of clients that start, embarking to what we call the mosaic approach. So instead of just using one or two data vendors, they start to plug and play data from many different vendors that actually will work to their specific data journey or their data needs, basically. So like mosaic approach is just like basically you pick and choose the best out of every vendor out there and try to put it into your one analytic platform. Yeah, the disadvantage of this model, obviously, it brings up the needs to the linking or the mapping that we spoke earlier, because all of these different vendors will have their own specific identifiers usually associated with the data. So that I think then if we have to bring in like one universal identifier, which everybody knows it's probably going to be ISIN or CDOL, then it will be like additional cost to the clients to actually subscribe to this identifiers to like their respective issuing identities. So I think, but with using this, like a lot of like our clients have seen like tremendous value coming once they figure out this mapping, the linking, and they are able to actually plug and play the right data for the right use cases. They have been able to see like tremendous values in, for example, like in their investment strategies, basically, so they can beat the benchmark by like 100 basis annually, or something like that. So it's something that is very common that we are seeing from a lot of our clients, basically. Yeah. So yes, it's the key is like transformation from just two vendors or one or two vendors to using multiple vendors, and then that actually requires a lot of like what do you say, like courage from the client side as well to be able to make that plunge into like the mosaic of data, as I like to say.
And I think it's also possible to work closely, obviously, with the individual vendors that you're using, so that they can obviously help, suggest the data sets that probably best match to some of the specific use cases that a client's looking for, rather than just be left to their own devices with data sets.
That is correct. So a lot of the vendors, even like ourselves, we do have like our specialists, like the solution specialists like myself. So we work a lot like in the beginning stage with the clients, trying to get them to understand the data first and how to, for example, use visualization tools to understand the characteristic before even trying to, do some advanced machine learning or algorithm, or even like trying to figure out a correlation of a data with a stock price. It might actually not be correlated to a stock price. Not everything is going to have a relationship with the stock prices. It could actually lead to a future prediction of, let's say, like their top line number, or maybe like inventories or something like that.
Great, thank you. And then, Kevin, S&P have been working on some really interesting new alternative data sets. So I think it would be, quite a good time to give us a bit of information, on a few of the more recent ones that we've been developing.
Yeah, sure. So I guess as well, just to touch on, given it's been quite topical, some of the NLP data sets, we've got like a textual data suite, which includes sort of global machine readable transcripts, data from earnings calls of over 11,000 companies globally, delivered in that machine readable format. We also have tagging sort of metadata tagging as well, which is performed by Kensho, which is developed by our in-house sort of data science team, was able to recognise and tag company names, aliases, and also understand the context around the companies that are being mentioned as well. So we can, not just deliver raw data, but also some analytics and provide insights around that. Obviously, within the APAC focus, we have our Asia transcripts data there as well. Includes about 2,000 APAC companies and expanded China coverage as well. And given it can read sort of Chinese language, any transcripts for earnings calls that might always be available to a wider audience are there. And also we've sort of developed and patented our own China sentiment analytics, which provides a daily sort of quantifiable time series sentiment on 15,000 Chinese entities from both public and private markets.
I think one of the really important points you put in there actually was the context, Kevin. So there's a fantastic article recently from Waters Technology talking about, it used to be content is key. There is so much content now that actually context is what is becoming key because, there's just so much data that they now need the context to go with the data. So I think that's incredibly valuable having that. Sorry to interrupt you, Doan. So
yeah, no problem. So again, another great example, again, it's sort of textual data, but obviously what we're doing with it is we have recently expanded our shipping factors that comes from our research signal team. These guys are our internal quant team. They've created our global factor library of over 400 factors, like the value, momentum, growth, industry models like airlines, banks, retail, semiconductors, and some specialty models as well, like short squeeze and cybersecurity models, which have been quite popular. But again, sort of sticking with the China focus, the shipping factors, they're created using maritime and trade data, data from a maritime and trade team, where they have access to the US bills of lading. So it enables us to provide sort of timely information on company economic activity that are measured through shipping trends. So these US bills of lading, very much paper-based, so no web scraping is available here. So, obviously it makes it a proprietary data set. But what we've had to do in order to expand our coverage here, we sort of fine-tuned and improved our own LLP. So enabling us to more effectively map some of the subsidiaries to the parent company. For example, there might have been spelling mistakes or abbreviations on the paperwork. We can now sort of map a greater number of those. We also improved the logic, though, for our import calculations. So previously, we were only looking at the consignee on the bills of lading, whereas now we're also looking at the shipper or the exporter, as it were. So it gives us a much more complete picture. So now what that leaves us with is an expanded coverage for China A shares that takes us to 1,500 companies. Now, our initial factors that we had there were sort of derived from 4 underlying import and export data items. So you're looking at volume, weight, value, and total shipments. And then along with measures of sector and industry relative activities and the relationship of those levels to sales. So obviously looking at forward estimates based upon those activity levels. What we've done now is we've introduced some macroeconomic factors as well. So we're looking at concentration ratios that track if a company have a key country risk or even a key product risk within their import and export activities. So obviously, given the issues around supply chain, and obviously given that China is quite key around that, we're introducing more factors that allows, both quants and fundamental managers as well, sort of to help with their investment process. I think the last couple of data sets, though, that I'd like to touch on, been pretty popular and sort of quite unique, is data insights. So we've partnered here with Hazeltree, who are the best-in-class treasury platform, to create an equity long-short data set that provides insight into the activity of sort of the alternative asset management community. Globally, it's about 13,000 equities on a daily basis. About 30 to 40% of that is APAC, and China and Japan obviously being the biggest contributors in APAC to that data. And in terms of China, that's sort of a lot of that is the Stock Connect activity. Now, it's quite interesting in a few ways, as it provides insight on both the long and the short side. Obviously, our traditional sort of securities finance data set is very much focused on the short side just by its nature, and it can be challenging to find sort of data on the long side of the trade. So quite interesting for people there. Also, we're able to break it down into 8 different fund strategies, such as long, short, macro, credit, and event funds. Obviously, so there's a lot more options there for understanding the impact on the markets and for back testing. Now, whilst the initial interest came here from pure quant funds, we are increasingly seeing that move towards the kind of quantamental guys that are taking more of an interest in these data sets. Where they're looking at it specifically on this on data insights really is kind of around how crowded a trade might be. So whilst we have like a large number of fields available within that data set, we're able to produce sort of like crowded and conviction scores. So maybe you're looking at the number of funds that hold in a name, the ratio of long holdings versus short holdings, or long versus gross holdings, that give insight into kind of the the market value. Oh, sorry, we also have other factors or ratios that provide insight into the market value of longs respect to the sort of fund's gross market value. So really kind of that crowding and conviction scores that really aren't available anywhere else. And given the way that they're produced, you don't necessarily need a large data science team to understand and make use of it. That said, we obviously have done some back testing on this with our quants in-house around the China equity data. What we did was we created a positive sentiment factor by combining two of the individual factors. And we basically created a long-short portfolio. So we were buying stocks with high positive sentiment and sold the stocks with low positive sentiment in the CSI 800 universe. And what we found is that yielded an annualized return of close to 17%, an information ratio of 2. Obviously some quite strong performance. We've now overlaid that actually with another data set from risk analyst, if you like. So we have quite a strong working relationship with a company called Bluefire AI. And it's given that we've got some mutual clients who wanted to test their data through our data lake alongside some of our own. What these guys have done is they've built an artificial intelligence risk analyst that they've named Emmeline, and it provides an early warning signal of unrecognised risk. So it allows investors to sort of underweight or remove allocations to those risky stocks to help them, limit drawdowns and volatility. And I think, going back to what was sort of discussed earlier around sort of, the retail trading and high volatility in general that we've seen over the last sort of 12 to 18 months, it's looking at the crowdedness, looking at kind of the potential for drawdowns and volatility is a challenge that sort of, people have been facing. So what that analyst does, or the way that it, sort of looks for risk, is performs bottom-up forensic accounting. I think they analyse around, it's about 150 key financial ratios. Reads all the news events, obviously. Much easier for that for an AI to do than a single analyst. They look at the analyst recommendations, and what they find is there's signal when the leading analysts diverge from consensus. And lastly, they're looking at liquidity, not just in equities, but also in bond markets as well. Then what they're able to do is just produce quite an intuitive signal on these risky companies. So they'll assign a signal, either high, medium, low, or neutral. And again, it's sort of, either you can use it from a quant perspective, or it helps just to augment that human analyst and their process. Now, given that Emmeline can read sort of Chinese language as well, we've overlaid their signals with our data insights that are just discussed. This time we use stocks in the CSI 300. On the long side of the portfolio, we removed names that had a low, medium, or high risk factor from Emmeline, and then we removed the names on the short side of the portfolio that had a neutral indicator. And we found that the annualized performance improved from 20.2% to nearly 24%, and the information ratio improved from 2.44 to 2.9. So again, a slightly different way of looking at the market, looking for risk, but a good example of just how unique and sort of new data sets really can add in value to investors, both quant and fundamental alike.
That's great, Kevin. I mean, we could talk all day about all the various different data sets that we've got and that we're working on. And also, as we mentioned, some fantastic partners that we work with as well. So we actually have a webpage called S&P Global Marketplace, which is actually on the S&P website. And this details the majority of the data sets that we have. So if anybody has any questions around those, please do go to the website. I believe you should be able to see it up at the moment. I'm looking at our questions and to see if anybody have come through. I don't see any at the moment, so you've got probably about another minute or so to go if you've got any questions you'd like to ask the panel. But whilst we're waiting for those to come through, I do have a final question, not the easiest one to answer, but I'm going to go for it, and hopefully somebody will give it a stab. But final question to wrap up the panel is: over the years, the trends have gone from consumer sentiment to geolocation data to social media data. I mean, what's the next big thing? Where do we think that's going to be coming from? Does anybody want to take a chance on that one?
Yeah, maybe I'll kick off with that one, Karen. Just speaking with clients very broadly, right? That we have a very deep engagement with. Look at from a data hierarchy perspective. Early indicators have been really popular with a lot of clients as an overlay on top of traditional. So what I mean by that is if you look at the FDA approvals, right? That's all public information, but it requires a vendor or data partner to go out there to collect it, to structure it. Obviously, during the COVIDs, a lot of the biotech firms, farmers, are obviously releasing and doing a lot of research around that. And as clients are sort of looking at investing in intangible assets, patent and IP data have also surfaced quite a lot, and as well as judicial. So Kevin touched upon the risk aspect of looking at an investment portfolio, court cases, permits. All of these early indicators are data sets. Is what clients have sort of been asking us to go out there and do some data scouting for.
Great, thank you, Melvin.
I can second what Melvin just mentioned. Clients want data as early as possible. So I mean, I've heard a lot that clients want to start to do nowcasting, I guess. So that will require like much higher frequency data. Like the point of sales, like the receipt data that we spend day by day at supermarket. A lot of our clients had already started using it to as a proxy to the GDP or like PMI, basically.
Yeah, definitely. Nowcasting is a word I most certainly keep hearing from day to day. Well, look, we haven't had any questions come through, but obviously, if anybody would like to ask them directly to us, please do feel free to reach out. I'd love to thank our panel for an incredibly informative session, and I wish you all a fantastic afternoon. Thank you very much.
Thanks, Karen, and thank you for moderating.
Thank you.
Thanks a lot.